NIPA's 105th annual, no, I don't know what this really is, but we have these meetings every month on different topics. So I'm Ron Wazurski, and I work for a company called Jack Henry. We're a largest vendor in the banking and credit union space. We provide services, specifically software products, to banks and credit unions. They basically range from very small to up to 30 billion in assets. And we've got 2,200 core clients and something like 9,000 total clients that we serve in the industry. I happen to be living and based here in New York, and I run a team that is specifically responsible for research and advisory services for our general managers and business units throughout the company. So basically, we're asked for our opinion on everything that falls in the space, and my team of senior analysts, go and do the research, and that comes in a lot of different forms. But we also are responsible for working with potential vendors and fintechs that provide services to us. So one of the areas that I work in right now and covering happens to be AI, artificial intelligence. Artificial intelligence is a really broad category covering a lot of different things. We're going to have a discussion today with this panel, and just about everyone on the panel are folks that we are in discussions with in various ways, shapes, and forms. What is so great about the folks here is that they have real live today use cases of AI that's been implemented in the financial services industry. And hopefully we're going to hear more from them about the kinds of real world offerings as opposed to things that coulda, shoulda, would have been done. So what I'm going to do to start this off, and by the way, AI happens to be one of the 5 major trends that my group and my company is currently tracking and working on. I'm heading up an enterprise-wide work group specifically on AI with 26 other individuals throughout the company covering 13 different business units. And speaking to folks like this will help to expand our knowledge base, but yours as well. Yes, did I miss something?
If I can just make one point, for those of you who haven't been to a NIPA event before, one thing we pride ourselves in is that it's interactive. It's not just people on stage. So if you've got a question, make yourself known, because that makes these things, I hope and believe, a more enjoyable discussion than sometimes at events where there's a desk, 50, 60, 70 feet away, and people talking in the light and in the darkness. So feel free and enjoy. And we've got events on paying for cannabis in July. We've got one on open banking. We've got one on mobility and payments, not mobile payments, but paying when you're moving. So just take a look at the website. There's lots of events that we do, and this is the typical format. So anyway, thank you.
Well, thank you, David. And what I want to do initially is just kick off a round of introductions of the folks on the panel. You'll find that these guys are very experienced, very senior within their organizations. I've got the 4 on the dais right now is Sanchit Mullik. We have Fung Rock. We have Richard Haney.
Very good.
I practiced that one.
Yeah.
And we have Alexander Brash from E&Y. And I want to thank Alex and E&Y and Patty Barlow for helping to bring this here and graciously offering their facilities. What I'm going to first do is just ask everyone to introduce, what you do within your company and what you do within AI. And maybe that's just a good place to start. Sanchit.
Thanks, Ron. So, Sanchit Malik, I'm based out of New York. Infosys is the large consulting system integration firm, provides services to the Global 2000. And I head our practice on providing automation and AI services to our clients.
Thank you.
Good evening, everyone. My name is Fong Rock. I run Feedside's global corporate development organization. Joined the company 4 years ago. We are a company now of about 400 strong. I joined at about 50 employees. We are a machine learning platform that invokes artificial intelligence and big data for financial crime. And so our platform is used by banks, financial institutions, as well as commerce and governments to detect anomalies using the power of machine learning intelligence to catch the bad guys and also bring in more of the good guys.
I'm Rick Haney. I lead our fraud and financial crimes practice area in IBM Global Services. So I look at this from a worldwide perspective, and I spend most of my time, I live in Atlanta, but I spend most of my time everywhere else, working with banks on their strategies and solutions on how to catch bad guys. And we've been using AI in this space for maybe longer than many other spaces, actually. You can go back 20 years probably when the first neural network models were used. So we understand AI in this space, but things are changing. And hopefully we'll talk a little bit tonight about some of those changes and challenges, especially for those of you that are putting in new payments platforms and thinking about new payment methods. But that's what I do, is try to help you guys figure out how to keep the bad guys away.
And I am Alexander Brash. I'm a partner in our machine learning and data science practice. Sort of wear two hats within the UI organization. The first hat is I help clients who are looking to implement machine learning, artificial intelligence to do things. Notably, that usually takes the form of automating something they have people doing today. They want to either take people out of a process, or they like to augment something that requires a lot of human judgment to take less time and effort. The second hat I wear is, given the uncertainty around the risks of using these techniques and partially the uncertainty of the regulatory environment in financial services for using these techniques, we help advise our clients on sort of staying on the right side of the rules such as they exist today.
Thank you. I want to start off just by maybe introducing the concept of AI and kind of what my takeaway is. I'd also like to go back to the group and ask them how they view and how do they focus on the AI environment. So from our perspective, there's this thing that's been around for, 50, 60 years that's part of AI now called RPA. RPA is robotic process automation. It's basically automating manual processes, and it's been done in the systems area for years and years. Process improvement groups do it today, and it's now been subsumed within the AI banner, at least according to some definitions. We have natural language processing, which is another area, and natural language processing is really taking unstructured data, think of a call center, and people calling in, providing information by voice, and then translating that into something that could be used for analytics, perhaps down the road, or for taking action on behalf of the customer. And then machine learning is the other. And we're going to hear a bit more about each of these, I think, as we go through the group. Another thing I just want to highlight is, from my perspective, AI is not about a product. You don't get AI. AI is subsumed within kind of the evolution of the products and the businesses that make up your company. And so Jack Henry, for example, started out this enterprise work group to look at how do we bring AI into the organization. We have it in certain groups today, but not universally. And we believe that that's part of that next evolution of businesses, to make them more efficient, to make them more customer friendly. And I think you'll hear some of that here today, although if people disagree, feel free to disagree with me on that too. And I dare say that we've heard about AI in many ways, and it seems like it's the answer to everything. No, it's not the answer to everything.
The blockchain answer was.
That was last year's answer.
Maybe 2 years ago.
Fair enough. It is expanding quickly. And what you're going to hear today, I think, is many of the use cases. In what ways is AI being implemented, and how does it make business better? How does it make your customer interactions or customer experience better? How do you identify what the right offering is for a customer, for example, and AI could very well be that solution. So I want to kind of go back to you guys now and ask you to give us kind of your focus on AI. What do you think about, what does your company think about when AI is, asked of you?
Sure. So, very consistent with how you approached AI, we take a fairly broad creative license on defining AI. And while the theoretical version is its simulation of human intelligence, but when it comes to practically adopting AI, for us it extends from everything from robotic process automation right up to machine learning and everything in between. Now, as it manifests with our clients, we sort of seeing three key themes emerging in terms of the projects that they're executing. One is, of course, driving robotic automation and how do they drive adoption at scale. The second is this emergence of chatbots everywhere, right? So it's a matter of a lot of interest for a lot of our clients, sort of leveraging on NLP that you spoke about, but then there's several other interventions as well. But this whole concept of cognitive assistance, virtual assistants, chatbots, all the same thing. It's certainly another stream of projects that our clients are embarking in. And then there's a third set, which is really about using machine learning to drive better decision making or just better business decisions. So these are the sort of three areas that we broadly classify AI into, but then there's several subforms of it as well.
So is AI the answer to everything?
It could well be, right? I mean, in some sense, if you look at how our services manifest in this space, it's very different from the kind of work we were doing, over the last 10, 15 years. As a system integration player, for example, if you look at large SAP transformation projects that we embarked upon over the last few decades, there were some very clear guardrails around what you would do. I mean, the client knew that they wanted to implement SAP FICO, and there was very little mobility between what they expected and what you were going to implement. With AI and automation, really it's the art of the possible, right? So, and in fact, the biggest challenge that a lot of our clients face is in terms of identifying and defining the right problem to address before they get into the solution mode. I mean, and fortunately, the world's coming around a little bit. I mean, I was just staggered when 18 months ago, I walked into a CIO's office and the conversation started veering towards reinforcement algorithms without really having any discussion on what is it that we were trying to do or achieve in the larger business context. But that's taken a turn. I mean, we went through this huge equivalence of a subprime crisis from a robotic automation standpoint. Everybody was saying, put 4 robots, get rid of 3 FTEs or some such mathematical equation, which never really worked out. But very clearly, we're seeing that clients focusing on identifying the right problem and then solving to that problem. And therefore, to your point, it could well be the solution to every question that you have, but it really isn't.
So let me just jump to Fan. Could you tell us a little bit about your view of AI? How is AI being used within FeedSci?
So,
and by the way, one of the things we tried to do in the panel is to provide not just a series of consulting perspectives, but I asked Fan if he would join this panel, because here's a fintech that its strength is based upon AI. So it provides a different perspective, because now you can imagine how other fintechs might be using AI potentially to improve their services.
You're absolutely right, Ron. Perhaps different from my colleagues at the panel here, we are very much fit for purpose as a product company. We are using a subfield of AI, which is machine learning, to actually attack what is commonly being attacked from a very legacy, kind of rules-based, non-real-time solution. If you look at financial services, artificial intelligence, quite frankly, is fit exactly purpose for financial services, where you have a tremendous amount of data, typically changing all the time, and decisions have to be made in real time. That's what AI does. today, AI is not new. It's 68 years old. It's been in the laboratories, or it's been at Netflix, or it's been in Amazon, it's been in Google. It allows us to understand what we want to do next. But what artificial intelligence does for FeedZai is it's a machine learning platform that actually allows us to begin enabling our banks to detect the bad guys, as well as bring in many of the good guys, or identify the good guys. How do we do that? We basically are able to take financial services information that is provided and be able to take that and actually hyper-granulate that from the initial 5 or 6 data points to thousands, if not tens of thousands of data points. Because we're not just taking a look at the financial services transaction, which happens to be your 16-digit PAN number, your MCC code, the terminal or the ATM for which you transact. But then we take that and we actually begin to do profiling across different areas. And we use the power of machine learning to identify the anomalies that are around that, such as how often this particular PAN number was involved in a particular transaction of this size in the last 6 months, or how long or how often has this IP address or this device ID or this ATM machine has been involved in a certain transaction in the last 6 months. And what we do is we profile that over the course of time windows, last 6 months, the last 6 weeks, the last 6 days, the last 6 minutes, the last 6 seconds, all in a matter of 5 milliseconds. 5 milliseconds takes you longer to blink your eye than it actually takes to score that particular transaction. And what we're looking for is not, is this a bad guy? But what we're looking for is, can we positively include this as a positive transaction so that we don't actually ruin the customer experience for David or for Ron? And so it's being able to actually catch good guys in order to weed out the bad guys. Now, of course, there's going to be bad guys. So FeedZai is built using the machine learning platform for financial crime. You will not see us play against IBM's Blue or Watson on games of chess or games of logic. You will not see us use our logic or our algorithms to build self-driving cars. We are fit for purpose within the financial services ecosystem so that anytime you open an account or when you actually do a transaction or anything in between, the machine learning is able to actually provide this active defense to make sure that we're protecting you as a customer and protecting the good guys from behaving badly, as well as, of course, the bad guys from behaving badly. And so it's very much fit for purpose, but that's what AI can really do for us. It really does hone in on what the anomalies are and what the net new behaviors that we may intend as we grow in terms of our financial services health.
That's something I wanted to.
One question, just real quick. You said at the beginning AI and machine learning and kind of mush them together, but can you make a distinction? Because there's a lot of terms we hear a lot. Machine learning, artificial intelligence, and there's another one Ron explained earlier about the retrieval process.
RPA.
Yeah, RPA, which I tried tonight. But help with those two, because I hear those a lot,
So,
and I'm trying to make the distinction.
so artificial intelligence is the mothership. Then there's subfields. Subfields on machine learning happen to be one of the subfields. RPA is one. Robotics is another. Robotics in motion is another. Deductive learning is another. And so we do not use those types of subfields because they're fit for marketing purposes. They're fit for reasoning. But from a machine learning perspective, what's key here is understanding behavioral patterns and behavioral histories, and be able to then use that as a feedback or machine learning capability to then understand that every time, David, you drop a breadcrumb of your financial service transaction, we understand that that's now the next reference for which we now can then score your transaction, albeit a customer service transaction or financial services transaction. You may be transacting 200 today, but tomorrow you're now transacting 500. Tomorrow you might be transacting in New York, but the next day you might be transacting in China. All of that learning is then coupled together from a machine learning perspective so that it feeds back into the loop so that we get better and better understanding of your particular behavior versus that of myself, versus that of Ron, even though we may have all the same American Express Platinum cards or all the same Silver cards, Visa cards at Citibank. What we're doing is we're able to actually take those minute details that machine is able to capture and confuse that with what human logic can provide and actually determine if this is in fact an anomaly or if this is just a net new activity by yourself versus myself versus Ron.
And just to directly answer your question,
even in academia, there is no agreement about what those terms mean. With all of my clients, the terms machine learning, artificial intelligence, and data science are used interchangeably. There's been a lot of attempts for people to show you the taxonomy of which type of
So it
algorithm.
shouldn't feel so bad.
Should not feel bad.
Okay, thanks.
I find them used very, very much interchangeable.
You know, one of the areas, David, that, for example, falls into the AI banner is NLP, natural language processing. And that's kind of a different slice of everything. Think about what you've heard of Watson. And I'll leave it to Rick maybe to talk a bit more about it. But if you think about it, and I'll take it out of banking per se, how about contract management and where you have words? How are those words evaluated, categorized? How do you react to them? What kind of actions are required? There's a whole bunch of things that will emanate from being able to interpret these series of words and what do they really mean? And are they things that we need to be able to take actions or steps or reactions to things that happen in the marketplace? So NLP is being built for a multitude of purposes, and it's not just analytics from a quantitative perspective, but it's also being used to make decisions and take action steps.
Can I ask you one question?
Yes.
For FeedSide, do you only look at transaction data, or do you bring in other sources of data for the behavior?
It's a good question, and that is absolutely, we bring in as much data as we can. Models and machine learning live off of data, and in fact, junk in, junk out. And so typically, you know, our clients, when they ask us how we price, we actually say it's unlimited pricing, because we do not want you to stop putting more transactions through the machine, because the more you feed the machine, the better you're going to be able to actually get a holistic view of that. If we were to build another type of model, then customers would typically just send us the bad transactions. And so you begin to overfeed or skew the model in one way or another. And so not only are we taking data that is direct from the customer in real time, and that could be an application data where someone's opening an account and they're providing their information to open an account, or transaction data like the example that I shared with you, a card swipe or an email or an online purchase or Apple Pay transaction. What we do is we take that data in real time, and then we mirror it with then the reference data that we have as historical profile information. And then we do one less thing. We also, in addition to that, infuse that with enrichment data. That enrichment data can be an IP address. That enrichment data can be the email history of how long you've actually had that email in existence. Or that could be a time of day or geolocation. It's taking all of those different data points and going back to that ATM address or the geolocation from which you're transacting to the distance from where you live or where your card is domiciled. It's all statistical variances and analysis that we're taking to play and doing so in a matter of, again, very, very quick, 200 milliseconds or less. And then coming up with actually a decision that comes with all of that triangulation of information. That's key. If you don't have that information, you can still be very powerful in processing, but you will further enrich that information with more data.
Right. And probably get more eliminate more false
Positive is just as dangerous sometimes as
yeah, I think they have a lot of customer experience.
I mean, fraud detection rates are fine, but unless you're correlating it to a false positive rate, it doesn't really mean anything.
Right.
you could have 99% detection, but you might have 93% false positives.
And that'll kill the merchant.
And
Well, it
Kill any
kills the
experience.
card number too. Well,
And when
yeah.
We have another question, Hector?
Yes.
is that information being fed back to your customer, your client in real time, or is that?
It is absolutely in real time. And one of the scenarios is we work with a very large credit union CUSO, and they provide technology for over 3,200 credit unions here in the United States. And what we find is sometimes it's very enjoyable. We have a dashboard that's in real time that actually is almost like air traffic control. You start seeing all of these incidents fire up in these really red heat maps. And what we're seeing someone who has skimmed an ATM card of a member of a one credit union, and they're going across the blocks, across the street, continuing to stick the card into the machine, and you start seeing it flare up, pop, pop, pop. And all that's because we take the information, immediately feed it back into the card account's history. So then the next time the gentleman walks across the street and sticks that card into that ATM with another credit union, it begins to then fire up as well. And you begin to see these road trips of fraud. And that happens at an ATM, that happens at gas pumps, and it happens at Apple stores. You find it incredibly, almost scarily entertaining when you see how a fraudster is waking up, going to a gas pump, filling up gas, buying breakfast, going to electronic store after electronic store after electronic store, and then at noon, guess what he does? He goes, buys food, has to eat, and goes back on the road and does it again, and then fills up at the end of the night. It's incredible how that ability for the machine to detect and transact, and then pick that up and then use it in some meaningful way helps us as financial crime agents.
One of the things that drew more and more of our attention into AI and companies like Feedzai is the whole real-time payments ecosystem that is beginning to grow within the US. Albeit slowly, it is beginning to grow and will eventually take on momentum. But if you're doing real-time transactions, think about bill payment, think about P2P. The money is gone. It's out of your account and in somebody else's hands. What if there is fraud that occurs there? And so what's that?
Sorry?
There is fraud that occurs there.
Yeah.
There's no what if. And it's hard on the consumers because in the real time, there's no callback. And they don't understand that it's gone, it's gone. And it's not like Visa where you can call up and say, hey, I didn't make that transaction.
There's no chargeback.
Yeah, there's no chargeback, it's gone. And so when you couple, the way I describe it right now is open banking is like frictionless banking. That's basically RPA for the bad guys. Because if you can go buy identities cheap on the dark web, no problem. But your gates used to be the fact that to use that identity, you would have to use some kind of a physical means to validate it or to create it. If you're either trying to take over an identity, you'd have to go find a point of sale device or something where you'd have a physical barrier to use that identity against. If you're trying to do a bust out fraud, or you're trying to open an account for fraudulent purposes, you'd have to go through some kind of a laborious process to open the account. But now that we have open banking, you can go get an account open with 15 data elements online in 30 seconds. Well, guess what the bad guys are doing? They're loading up all the identities and they're running bots against those account opening websites and seeing how many accounts that they can either open or access using their version of RPA. And then your real-time payment is the monetization, because once I get access to it, I can move that money very quickly, and it's a nirvana for both fraudsters and money launderers to be able to structure payments and disbursements through peer-to-peer real-time payments.
Let me ask you a question. Is there any, just as a follow-up, I'll be right back to you in a second. Is there anything within AI that's beyond what you've heard people talk about so far?
I think so.
That there are things.
I think so.
Like what?
Well, at the end of the day, fighting fraud is about behaviors and relationships. If I can understand behaviors and relationships, I can fight fraud. We've had neural networks in financial crimes and fraud for over 20 years, right? I think FICO probably introduced the first one that really got mainstream notoriety with their Falcon platform when First Data, basically put a Falcon score into the authorization stream, so banks could start to understand the risk of payments. So we've been doing this for quite a while. The problem with it is the false positives. A neural network is not cognitive AI. In other words, Falcon will generate a score of 800. Why? No idea, right? We just know it's 800. We know it's risky. Is it risky? Well, in the old days, it was risky because a person who didn't travel overseas very often now goes overseas, and our consortium model says that's risky behavior. We're going to give it a score of 800, and then it was up to the bank to figure out if that was a legitimate charge or not, because there's no way to know what 800 means. You can't crack open a neural network and see why. As we move into cognitive and artificial intelligence, we start to see why. We understand. We can, instead of using AI to be the model, we use AI to create the model. In other words, if I can create a model that is in human readable form, which some would call rules, I guess they are rules, but if you can use AI to scan and monitor the billions of transactions as they're flowing across the wire, find the patterns and anomalies and say, here's a rule that says, combination of the amount of charges at a given merchant between 2 a.m. and 4 a.m. or merchant code between 2 a.m. and 4 a.m. on Mondays and Thursdays combined with blah, blah, blah. You can now understand exactly why something might be tripped as fraudulent. The analyst can look at it and say, oh yeah, that's exactly why. Or you could send a message back to the client, customer in real time. So I think some of the next generation, the third generation, is using it, it's kind of like the equivalent of using robots to build robots. I think the next generation is going to be using AI to create the AI models. And that, I think, is one of the things that's in front of us.
Thank you. Tay, you had a question?
Yeah, and it's along these lines. So can AI develop this fast enough to protect consumers in this real-time payment space? And is there any way consumers can use it to create personal firewalls around their account so it doesn't get bled in the flash of an eye?
Yeah, so to the first question, absolutely. And it's interesting, I refer to it as, it's not very innovative, but protection by design. It's surprising how many banks are entering both digital transformations and payment modernization programs without thinking about the ramification on how to defend those channels. Because as soon as they open up, right, now they're creating, it's not only easy for customers, it's 10 times easier for the backers. And the new payment channels create, a perfect storm. I'm calling it the golden age for the bad guys, right? Banks right now, their digital channels, maybe they're detecting 50% of the fraud in the digital channels, the good guys aren't, because their traditional means aren't keeping up. And so, yes, I believe that AI is the solution to allowing you to keep up with the pace that we're now operating at. That's the biggest thing that's changed, is the pace. On the consumer side, it's an interesting question. I think the answer is yes. But it may be a market opportunity for someone to come up with a mechanism to apply in the consumer side, because the problem is the consumer doesn't have the infrastructure, and they're not in the network where they can operate in under 10 milliseconds, right? They got to be, if you're going to intercept a payment and stop it, you got to be below 10 milliseconds in terms of your response time, and you have to be in the authorization stream. Because once the money in real time is there, it's gone, right? It's gone, and so. The consumer side is an interesting question. I need to think about that a little bit more. I suspect the answer is yes, but I think right now it's still probably going to be a burden on the banks to provide this sort of protection. And AI is going to be key.
Yeah.
So I'm curious as to what you think the interaction is between AI and AR and VR both ways. AI to feed AR, VR and AR to feed AI to improve AI, and that whole
Unstructured space.
Could you give us AR and VR and put the words on those?
augmented and virtual reality.
Thank you.
Certainly, there's some interesting applications of that in the financial crime space, which is where I look at it.
Mm-hmm.
There's a lot of digital channels feeding information that are probably not right now, or that aren't really being leveraged right now. So I think there's an opportunity for that. I'm not sure if it's the first opportunity I would go to, because I think there's some less challenging ways of defending the banks right now than bringing that into play. I think there are other applications outside of the payments and the fraud space for that. But I think I look at where the banks are at right now and the payment processes are at right now, especially the smaller banks and the consortiums that are protecting a lot of the credit unions, for instance. I think that there's some simpler things that they can get their head around before they would need to take that step that they're just frankly not doing right now.
Alex, what about from your perspective? Do you think that AR and VR have potential uses for AI?
Yeah, I mean, really good question. Agreeing with my colleague, for financial services, I have not really seen that used in the most meaningful ways. Everyone wants to do the minority report thing, right? You have all these data streams coming in, and the AI has told you there's going to be some crime coming up, and all of a sudden you get this augmented reality screen where you're seeing video and you're seeing transaction data and you're swiping things back and forth and all the pre-crime. All of a sudden you're able to come to some conclusion and like stop it before it happens. It's not been my experience that we're really there yet in financial services, more so with augmented reality and things like industrial manufacturing, where they're doing things like safety checks with workers, being able to see through the headset and seeing if the checklist on the machine was done while they're actually touring the plant. For that stuff, yes. For financial services, probably a lot less. I think to me, for applications of AI in financial services generally, and maybe this will also be a direct answer to your first question, is AI the answer to everything? To us, that's an emphatic no today, given the current development of the technology and research. And it's a no for the following reasons. Today, generally, AI only works well on problems that have the following three characteristics. Number one, you need a really long history of transactional data to have your models train on. Number two, in those transactions, you need a way to adjudicate good from bad. And three, you need a way to measure how good and how bad. The number of problems, that is not a general intelligence model where you have some brain that's able to learn the rules of any game and execute it better than you. That's a very domain-specific problem. And there are many interesting ones that you can solve. And I think you alluded to this, right? Where you're trying to detect fraudulent transactions based on a long history of good and bad transactions. But the idea that you can sort of be predictive of future events in some general way, I really don't think we're there yet.
Do you think we will be at some point?
Well, from our experience, maybe perhaps the way that we use AI, but let me go back to the question. I come from an AR/VR background as well. So I don't see AR/VR being used from a financial crime perspective. I see it used for financial services as customer experience and, quite frankly, growth. It's being able to walk into a branch and understand using augmented reality of how a customer has a particular tendency to want something because they are looking at a sign, and then from there they're able to, or let's say they're looking at a car at a car dealership, and from that car dealership they're able to put on a screen that then begins to detect the loan amounts and the loan payments for which they can actually buy that car with in real time, right in front of the car itself, right? So being able to use that and then using artificial intelligence to actually then become more of a recommendation engine, kind of what the next best action is now if Lois is looking at a particular car and then she's asking the augmented reality application, what would be a payment if I were to put 5,000 down based on what the current interest rates are. You can then determine 5-year payments, et cetera, and then what's the next best action? The next best action is to email her a Wells Fargo or a Chase or a Citibank loan application. That's how those, I think, would come together. That's what I found, less financial crime than that, more growth.
Now, the interesting thing with that is if they do move in that direction, that would be wonderful information on the financial crime side that you could have into, right? If they created a virtual reality for the shopping experience, or the sign-up experience, the buying experience, now that gives you more behavioral data to your point on profiling, which is key to this business. That would give a very nice data feed. So it might be indirectly, we would get more insight. I'm sure the fraudsters would look at that and find a better way to use it to do what they do.
Well, that was part of my question was, the more you get interaction, whether it's from purchase, customer standpoint, just interest standpoint, is more a combination of that, with data with other parts of data that feeds all aspects of risk, fraud.
That's right. And look, there's two things about this that are interesting. Number one, behavior is really, really subtle. We think about it at the human level at certain levels, but we care about how much time the mouse is hovering over a spot on a screen, or how quickly we're moving through, or what is the normal steps that I go through when I log. We get really, really fine-grained detail if we get the right data streams of these behavioral profiles. So it's really important. But here's the thing that makes AI very different in our space, in the financial crime space. That elevator system out there where you said what floor you're going to, there's probably an AI algorithm sitting in the background able to predict which car to send and where, when the maintenance is going to be required based on how many trips it takes. And it's brilliant stuff. But you know what the elevator isn't doing? It isn't trying to screw you up. The engine isn't there actually trying to say, oh, they got my algorithm figured out, I'm going to change my behavior. But that's what the bad guys do. So as soon as we have an algorithm that we think is understanding behavior and we stop it, what is the bad guy going to do? They're not going to just sit there and say, oh, okay, I'll just keep doing what I'm doing like the elevator. They're going to change their behavior. And so now the trick is, from a data science and an AI perspective, is how quick can I spot that change? To be honest, we're at a point where it's not about detecting fraud. Banks know how to do that pretty well, especially in the traditional channels. The trick is, how do you detect the change in fraud, right? Banks, frankly, and insurance companies, most institutions accept a certain level of fraud. They're okay with it. As long as it stays in the normal boundary, I can cost around it, build it in my business models, I'm fine. What they don't like is change, because a new fraud scheme is hitting them. Something has changed, right? And it's either going to detect more fraud, create more fraud, or trick your algorithms into creating more false positives, neither of which are good. So the real trick is how am I using AI not to detect a fraudulent transaction, but how am I using AI to detect a fraudulent scheme? And that's what I was talking about earlier, about using AI models to create the models, because AI can spot those changes and tell me what I should do about it. And I can bring it to a fraud analyst who understands, oh, if I could have seen every one of the 40 billion transactions we crossed last year, I might have figured this out. I couldn't. I need the AI to help me with that. I need that to come to my attention. I need a recommendation. Then as a fraud analyst, I can now decide, yes, this is logical, no, this isn't logical, and put it into play. But the trick is spotting the scheme and the change, because the bad guys don't sit still. And that's what's different about every other branch of AI in our space.
Yeah,
How do you strike a balance? So you mentioned earlier, you can't open a neural network and see how it works, because they do so many calculations, no human.
Well, they show up as
understand.
coefficients, and the coefficients
Right.
don't mean
So how do you strike that balance,
Maybe I can.
as it gets more complex, of getting in a financial service, it's so dependent on auditing, to versus plugging feeds in and just trusting that the algorithms are taking
So
care of it.
there's actually a solution for that. So
It's AI.
well, it's not just AI. So
Sorry.
So
I resist that one.
Okay, it was art.
no more from you.
So a little history, perhaps, to just provide context. Our co-founders were actually rocket scientists, literally. They worked at the European Space Agency about 15 years ago. And where they were focused on was to build a machine that they could incubate in the European Agency to do several things. Number one, to look at the vast variety of data that space offered, to then be able to also work with the ever-changing speed of that data, as well as then to not only understand the meaning of that data, but to predict what that data will say. Because what did they have to do? They had to launch a particular spaceship that will hit some planet that comes across the other side of the sun 2.5 years from now. So they had to be predictive. And so when we built this platform and then we put it in financial services, we felt that there were 3 key tenets for which we had to have. Number one, it had to be able to take in as much data as possible. It had to be flexible, taking in data from the bank, taking in data from other third-party resources, taking in data everywhere that is very much bespoke to that particular use case. Not consortium data, but very particular data. And we do that in a very quick manner of time, because data scientists, they love building models. They're fantastic if-then statements. And rules are very good when you know exactly what you're looking for. I am looking for 3 black cars and a red car. But models help you find things when you don't know what you're looking for. And it's being able to then do so in a fast manner of time, so that not only are you taking that data, but you then can predict what that data looks like. And so, for example, when we help our banks open up accounts, there are the tenets for which we solve. We first say, is Ken who he says he is? Do the credentials he presents belong to him? Which are very easy, if-then rule statements, step-up statements. But then does he have not only a history of fraud, but does he have a propensity to commit fraud? And being able to actually build models that then are able to then put into production in a matter of moving it from one environment into another environment helps you stay ahead of fraudsters, because, as my colleagues are saying, fraudsters are smart. They're always gaming the system. The moment that you stop them at a $5,000 limit, guess what they do? They transact at $4,995. But being able to then actually move models from data science into production in real time allows you then to use the real-time data to stop these fraudsters, because the fraudsters keeps on running. And so you're able to stay in front of them. And then finally, going away from the neural networks environment where they do really good at detecting, but when you actually understand, when you actually get a detection, you actually don't know why it was deemed this way because you get a reason code. You actually use algorithms like random forest or deep learning, where these random forest algorithms are actually very much open box explanation so that you actually understand the different, not only trees of decisions that are made, but the individual leaves across these trees. So that when a fraud analysts are looking at why this transaction was detected and why it was put into manual review, they'll actually spell out in semantic layer of explanation the statistical analysis of why. Is it because this particular transaction is 47% above average transaction size during this time of day, during this particular hour of the week, during this particular geolocation? All of that comes into place because you're right. We as humans, we can't read that or deduce that quickly. The machine can, and then puts it in front of us to then make a human decision of, that's right, this is fraud, or this is net new activity for this particular.
Yeah, if I, just kind of building on that and answering your question with a slightly different approach would be, I don't expose the score of the network. It doesn't matter. What matters is, is the rule. Because at the end of the day, even if there's a score, there's a rule behind the score, right, in terms of what you do. I agree with the approach you're taking. I take it a step further, though, and say, if I can use AI to form rules are actually pretty good. They execute really fast, they're human readable, you know exactly why they fired. And neural networks to me are like carpet bombing. You're going to hit the target, but you're going to hit a lot of other things. You get a lot of collateral damage. Rules are like missile strikes. I'm going to hit exactly what I'm looking for at that point in time. And you got to kind of know what you're looking for. But if you're using AI to tell you what you should be looking for based on the patterns and trends, now you can actually rules that are logical, coherent, understandable, focused, and targeted, and you know exactly what they're going to hit and not hit. Those are readable. So I don't have to worry about how far I go with the neural network, for instance, because I'd argue they've outlived their usefulness in our business. They just have. But moving them to help, not the neural network, but using AI to inform on rules that can fire or form other types of random forest or modified random forest type decision trees, you can now deduce it back to something that's understandable, and that's key right now.
Yeah.
Amy?
So just a question. So one of the things that, was my understanding of kind of a holdup point within financial services for some of this is because we're so regulated, and for decision making to be able to explain to somebody what went into this. So where do we stand at this point with that kind of challenge of being able to explain to a consumer, oh, we made this decision, but it's buried in all of this?
So Lael Brainard, about 6 months ago, the Fed governors gave a speech on exactly this topic, I believe entitled "What We're Learning About AI." And she spoke at length about, from a prudential and conduct regulatory perspective, the need to balance not wanting to curtail innovation in U.S. financial services institutions with the worry that if they over-regulate and curtail innovation too much, it'll all get pushed into shadow banking sector. With the need to understand how decisions are viewed and reached, particularly when those decisions impact consumers and extension of credit to consumers. In point of fact, unlike what you've seen in Asia and in Europe, where you've seen respectively the sort of FEAT principles out of the Monetary Authority of Singapore, or in Europe GDPR, where they have a privacy regime, there's no federal US legislation which speaks directly to this. There are rules about fair lending, equal access to credit. There are rules about market conduct and market abuse, but there's nothing that is specifically adapted to deal with any new risks introduced in AI. What we see the regulators doing today is sort of a three-step process. The first thing they're doing is engaging with the industry and trying to understand where everyone's at, where this stuff is actually being used. The second thing they're doing is looking at their existing regulatory tools and seeing, are these things fit for purpose or not? Do they continue to address the changing risk profile of financial services given the introduction of AI? And then the third and final step, which they've not reached yet, is to modify or add new rules or propose new guidance in cases where they find that their existing regulatory tools are not appropriate. Particularly in sort of consumer credit contexts, Reg B still applies. You still have to be able to give reason codes to people. Even if you're sort of using AI behind the scenes, you need a human understandable reason that comes out at the other end of the box. And for now, that's still the standard we think everyone's being held to.
It varies a little bit from my perspective between fraud and AML. AML is much more regulated in terms of what you have to do. And to be honest, regulations that the banks are getting is horrible. Up in Canada, typical false positive rates in AML detection in terms of the detection event to filing a SAR or an STR there is about 95 to 97%.
Really?
Yeah, but it gets worse.
Wait, that percent are false positives?
Yeah, but it gets worse.
Because his tools are great at detecting.
Well, it's not even the tools, but it's also what the regulators mandate that you do to look for things. But it gets worse because the 3 to 5% that actually get submitted, 95% of those are false positives. And it has to do with the regulated approach to determining what you should be looking at. And as I said, fraud and AML are studies in behaviors and relationship. If we were to do what we know we could do using AI, for instance, in AML, we think we'd have a much better, hit the false positive rate, might actually find the bad guys rather than just going through the motions. But those are hard to get through regulatory bodies because they have to understand the data science and the algorithms to be able to explain it. And they're not there yet. On the fraud side, it's not as bad because on fraud, it's ledger driven. It's not regulatory driven. So banks have more latitude there. They do have to explain when they don't open an account. And what the banks are concerned about right now is bias that's introducing into the decision model. So they're concerned about bias in the AI models leading to decisions. There's ways you can detect for that. But fraud is actually a pretty good place to apply this because at the end of the day, we have known outcomes, right? When you get a fraudulent charge on your statement, somebody knows about it, right? When money leaves your account, somebody knows about it. So we get good outcomes so we can actually train models and build models more effectively because of that. And the bias then, you can try to defend against. If the regulators want to start to get more involved in determining, bias and decision-making criteria on the fraud side, we could end up in the same situation that we are on the AML side. So it's a challenge. We can solve it, but we have to partner with the regulators on how to do it.
One of the things I wanted to do was to take us, the discussion is really good, questions are really good. I wanted to try to hit on a little bit of the use cases on how is AI in its various forms being implemented today by exactly the people up here. And maybe the place to start that discussion is, what is the one low-hanging fruit that you guys, and essentially maybe we'll start with you, that you think is a low-hanging fruit in the financial services industry that is being done today, and that any banker or credit union, in theory, if they define the problem appropriately, can build a case for that solution?
Sure. So, I'm not even going to risk getting into the fraud space. I'm not an expert, so yeah. But really, for us, if I go back a couple of years, and this is when RPA was very prevalent in terms of adoption. A lot of it was in the enterprise function space, finance, HR, procurement, so on and so forth. But where we're certainly seeing banks moving on is we're seeing a lot of RPA, but augmented with NLP, text analytics, kind of interventions to drive automation in the account opening process, loan origination, and really driving straight through processing in terms of.
What's the problem that's being solved? So
So-
it's being used in these areas, but how to achieve what objective?
Yeah, so, there's one client for whom we looked at the entire loan origination process in its entirety, and by using appropriate interventions of RPA and text analytics, we've achieved rates of 65% of the applications, sort of being processed touchless. There's literally no human intervention in that. Now, that has manifested in much better client experience. The turnaround times are 75% lower. obviously efficiency gains from a client standpoint. So it's sort of hitting at both efficiency as well as improved experience, right? And so that's what plan's going for. And one of several use cases. Similarly, there's an insurance customer of ours, stop at Hartford. What we're doing for them is in the entire claim settlement space. Again, combination of automation to drive smoother claim settlement, but we're also setting up virtual assistants to change the experience dimension. And then, starting to set up phase 2 on can we do claim settlement based on image analysis that we get from incidents, for example. So there's a lot of these end-to-end processes that we're looking at, which are starting to emerge in terms of being amenable to automation and AI.
Great. Alex, I'm going to try a different, with the same kind of question, but I think there might be different experiences that you have, maybe that Infosys has.
Yeah, I mean, to me, there's been one use case, and this just could be my own bias, but there's been one use case which has dominated my experience in real applications that are working in production at the clients I serve. And the use case is as follows. Take some type of process which involves people reading information and tagging it somehow. Perhaps they're reading descriptions of errors, incidents, issues. They're reading descriptions of things that have gone on within the organization, and their job is to read it and to tag it to a particular type of failure, particular type of risk, whatever that process is. And there's a lot of versions of this, whether you're working in an operational risk function or a fraud function or a compliance function. There are people that read English text and then they classify it somehow. That problem is very well suited to machine learning techniques. And most of the projects that I've had in the past year involve putting in an algorithm that does the thing that people were doing. The algorithm reads the information. It looks at all of the types of metadata it gets, who submitted it, what division they're from, pulls out just some text analytics on the substance of the English itself. Then it tags it in a variety of ways. And the way it does it is as follows. So let's say you have lots of text, and you know that the text has to get assigned to one of 10 categories. There are 2 models that happen. The first model that gets created is you create 10 models, one for each of the potential 10 classifications. Each of these is called a binomial classifier. All that does is say, it reads the text and it says, am I this type or not? So you got these 10 models that run. It says, yes, I think it's this, I think it's that, I think it's this, I think it's that. That's your first level of model. Your second level of model looks at the results of all the binomial classifiers, looks at all the ones where it said yes and where it said no, figures out how to weight them to see what the real answer is, and then outputs a final score. You get sort of a, here's what I think the classification of this block of text is, and here's my confidence interval for how sure I am about it. Works for classification of incident information. It works for legal contract review if you're trying to find all the parts of the document that talk about certain kinds of fallback provisions. I think it was in the Times about a year and a half ago. JP Morgan Chase did a massive implementation of this, particularly for legal application review. And to me, this has really dominated where I've seen it used at scale.
So this is an NLP, natural language processing engine?
It is, yeah. It's a few things at once. Part of it's natural language processing. Part of it is regression. Part of it is random forest. The specifics don't matter so much. Yes, there's an NLP component, and there's also a bunch of other classification models which are used on top of it.
Just to reinforce that one, the one where we sit at having great applicability is regulatory compliance obligations, just the volume of paper and the number of people with yellow highlighters sitting in rooms looking at regulations for, say, you want to enter a new market, change your part of business. It's a great example.
So Rick, is there a low-hanging fruit that you see?
There's a lot of them. We talked a lot about fraud, so I'll shift a little bit. I think alert processing. And what is an alert, right? Alert is an AML alert is a fraud alert, but alert are things like complaints coming in from consumers, right? Anything that's bringing information back on something that is being reported as an anomaly, whether it's a system-generated anomaly or a human-generated anomaly. A dispute and call chargeback desk at a bank, one of the larger banks, 10,000 people working on that desk. But these anomalies are sometimes hard for us as humans to recognize the patterns. One of the examples is if Wells Fargo had been monitoring their complaint lines, for instance, they might have seen a signal that says we got a problem here, but we don't think to look for that. And even if we did, it'd be hard to find the signal in the noise on what's coming out of that. Your fraud alerts can lead to very interesting insight in terms of internal collusion if we know how to work them across different channels that we may not be thinking about or seeing. So if you look at the number of people engaged in the manual process of dispositioning alerts, the number of sources that are generating alerts, and I'm using a fairly broad definition of that here, are pretty significant. But there are some really, really important signals being hidden in the noise, because most of it is noise, but inside of there's some real important signals. And I think this would be a low-hanging fruit area. And if you combine it with what you're talking about, a lot of these things are in unstructured text. So you wanna be able to pull insight from that unstructured text. I think there's both operational savings and better decisioning that could be done if we study the alert problem more pervasively within the banks. And it may not be that hard to actually start applying some technology to it if we took it on as something.
So, Fang, I just wanted to ask you, clearly your company has one
We have a great
main reason for being. But I sort of touched on a little bit on real-time fraud mitigation. You also have kind of an approach towards a rules-based engine that you utilize, I assume. And is there other uses within that realm that you apply today?
As I shared, rules are very good and important when you know exactly what you want to find. Enhancing it with machine learning is where we find now the augmentation of what technology can bring us. Everything that he said is exactly it, right? In terms of bad guys do not create fraud in one place that's convenient. They don't just show up and say, I'm going to commit fraud at the bank when I want to open an account, or I'm going to commit fraud when I want to do a transaction. Fraud manifests itself throughout the entire engagement of your customer lifecycle. And so at the account opening stage to where there's a transaction or monitoring or AML, fraud exists throughout. Financial crime and bad actors exist throughout. They may penetrate the shortest point or the easiest point of compromise or the weakest point of compromise. And so where I believe machine learning can help is being able to provide an enhanced detection, being able to do so in real time so that you can also preserve that customer experience. And also from an automation standpoint, it's not replacing people. It's actually allowing people to do what they do better, quicker. I have banks who are looking at hiring 400, 500 analysts just because they happen to launch a new business line. How can you possibly bring on 400 to 500 trained individuals that quick to measure up on all of the transaction growth that you happen to have because you launched a credit card portfolio? That's where machine learning can actually cut through a lot of that noise. And instead of having those as alerts and then false positives, actually take those alerts, apply a machine learning understanding to them, and actually cut those alerts to truly what is in fact those required manual review instances. That then, again, providing a very much open box capability to then have the type of information that you need to do very quick forensic investigation, rather than say, I'm going to put this aside and I'm going to now require analysts to go and do 2 to 3 weeks worth of work and then come back. It's the ability to task back in real time and do so in a very large breadth that I think artificial intelligence can be applied, at least in my industry, financial crime and crime.
Yeah, sure.
Just have a learning question to ask. It's somewhat of a pivot. I'm really interested in hearing from what are your clients asking you from the standpoint of fraudsters that exist or potentially exist within the development in the machine learning environment as the vendor risk. What are some of the embedding questions that your customers are asking you in terms of the potential bad actors that are staged to develop machine learning within the organization.
So,
I mean, in terms of information security, privacy.
right. Yeah. So we have been blessed to actually have companies that are customers that are small and big. We range from Nike, Starbucks, Adidas, those are the small ones, to Goldman Sachs, Apple Card, Citibank, Capital One, as now also the United States government. We actually transact and score every tax payment that we make as individuals here in the United States using the machine learning platform. And the key questions typically are very much everything that you guys are concerned about. Number one, data privacy, data security. And are you commingling my data, my customer's data with others? The answer is no. Contractually, we are not allowed. In fact, we don't need to know because we're not looking at the actual PII information. We're looking at metadata and learnings because that's what's really most important. And we're able to take those learnings and actually allow our customers to benefit from those enhanced model learnings. In addition to that, data governance and model governance. Are you able to then say that if you're helping me score a transaction to open an account, and if that happens to turn that person down, is that reason for reasons of fraud and risk, or is that for reason of bias? And in fact, we build models so that we're taking bespoke data and not consortium data, so that you actually understand not only the ingredients that are part of that soup, but actually the level of ingredients of that soup. And so it's really very much open, so that when our customers actually are looking at putting a model in place, we have a report that allows them to go upstream and do a complete model governance process internally to say, yes, we allow this to happen because all of the data attributes that are part of that decision process is not, again, against any particular regulatory
it's in compliance.
It's in compliance, right? It's not, there's no compromise in that regard. And then I think lastly, it's can you do it very quickly? Because again, our ability to make a decision is very important for us to maintain a customer experience. And so can you do this in terms of being able to deliver this in line with the authorization message? And as my colleagues mentioned, yes, it's very important that not only is the transaction happening in real time, but then all the enrichment of that data, the hyper-granular profiling of that data all happens within 5 milliseconds or less. That's how you maintain a positive customer experience while at the same time maintaining a very good fraud detection and real time.
Consistent with what you said, I found the technology firms themselves the technology firms are further ahead than financial services firms themselves on having appropriate security measures and tools to anonymize the data in useful ways that the models get built off of, to have access controls that sort of hard firewall the developers when people working on production management. What I've seen, while there is a discipline around this in FS firms, they're not quite as sophisticated as having the very factory-like approach of saying, okay, this is my production data, it gets anonymized or sort of filtered or otherwise rearranged in a way which it still preserves all of the signals you need to build a model, but it gets rid of all of the sort of PII information and other things you're worried about. Then having to process at the other end once you have the model working well to get that model into production without letting a potential rogue developer get in there and steal things, or have the model work to their own ends. For whatever reason, perhaps the history, having done it for longer, having more developers to worry about, I've seen the technology firms be a little ahead in that regard. It is something that my clients are very concerned about and asking about frequently, where they are themselves developing data science capabilities and algorithms. They're not as far along. They have more cases where their developers, their hobbyists, their experimenters are sort of getting into quasi-ish production information than you'd see at a technology firm.
I think that from my perspective, the interesting questions I'm getting these days from the customers are the wrong questions. They're just asking the wrong questions.
They're interesting because of the wrong question.
Yeah, it's like driving me nuts, but yeah.
You're talking about objectives.
Well, the biggest thing they want to know is, well, what's your score? How do you compute your score? Why do you want to score? Well, because I've always had a score. Why would I not? Don't you want a decision, right? Aren't you really trying to get to a decision? Now, if you need a score to feed another system, fine. But we're moving into a new generation, and the customers right now that I'm dealing with a lot of times are asking questions about the past, not the future. And so they're asking the wrong questions, right? They should be asking, how are you deciding? Trained for the last 20 years that you intercept a transaction based on the score. They want to know, what is your score? And they want to know, what is your model based on? And you know, to your point, a lot of times those models in the past are based on consortiums that have nothing to do with that individual's bank's risk and profile and exposures, where we get the absolute perfect data from the bank today when they tell us what their fraud actually is. And so they're asking the wrong questions. So I'm not sure if this is exactly where your question was going, but for me, I spend a lot of time trying to figure out a way to politely answer a question that I think is irrelevant. And I don't think our customers are asking the right questions right now in terms of the outcomes and staying in front of the background. So maybe that's a provocative response, but.
Hey, you had a question?
Yeah, this may be a little oddball, but can the kinds of models in AI you're talking about be used to break the anonymity of cryptocurrencies like Bitcoin and break up money laundering and dark money transactions?
Yeah.
And who could do that?
It's exactly.
Who would be the customer to do that?
It's exactly what we've been talking about. It's profiling. It's understand behaviors and relationships in the network so that you can start to understand. You know, if you see in real-time payments, we'll start to see both sides of the transactions, and we can deconstruct the actual money flows and identify where they're going, because they're not usually going that far. We don't see them.
We introduced a product about 6 months ago called the Fraud Genome. And it is using machine learning and AI to do a link analysis on the actual origin of that financial crime. What we did was we actually took different examples, and you can actually see it on our website. We actually took different examples of actually a e-commerce customer, as well as a AML breach that happened. And over a 6-month period of time, you begin to see clusters that are building, very similar to that of cancer cells building within a body. And you begin to see small individual entities that then begin to have commonalities that are grabbed around it. And you have a cell here, you have a cluster here, you have a cluster here. But when you actually step back and look at it, you can literally do a link analysis and find out that the money that was left here in New York City goes from different sub-accounts to different corporate accounts to different personal accounts to accounts for which an individual is a co-signer at a corporation and his wife happens to be a co-signer of a particular corporation, all the way back to originating it from 3 times across the globe. It basically ended up in New York, but it dates back to somewhere in the Middle East, somewhere down in Latin America, somewhere back in New York, somewhere back in Latin America, somewhere back in the Middle East. It's amazing how the power of the machine can process and actually see the actual origin of that financial crime. That's how powerful these tools are. And guess what? That's what your fraudsters and your organized crime criminals are doing today. Today, the guy who's providing or who's committing fraud isn't the guy who wants to commit fraud because he wants some Ducati jacket or he wants some Apple computer. It is a set of organized criminals that are actually looking at how they can take money and begin to build and fund very nefarious acts, terrorism, child labor, sex trade. It's a horrible, horrible industry. And they're not looking at $60 or the $70 that they might get off my credit card. They're looking at the $4 trillion that Citibank, Treasury, and Trade is transacting between its corresponding banks. If they get 1% of that, it's going to make their day. And they're continuing to move this. But these are the tools that they're using.
Let me ask you a question. What was interesting to me is that nobody mentioned chatbots, yet in the financial services industry, the USAA has come out with its chatbot. Bank of America has Erica. Most of the tier ones are developing their own solution there. And a large part of it is trying to figure out how to make the customer experience better, either as an agent assist kind of capability, or direct to the customer. There's a whole new generation of millennials that I don't really want to talk to a person. I just want that bot to answer me correctly right off the bat. That, of course, the bot has to understand what the person is saying, be able to interpret it, or the agent needs to make sure that they're getting the right question being answered by the bot. Has this whole area been explosive in any way? Is it something, Sanjeev, maybe you're in a good place to answer? Anything about bots going on in your world?
Yeah, I mean, I think I touched upon this right up front, saying that this is one of those three areas where literally every company that we're working with, every client we're working with wants to experiment, right? So, for example, we have been part of the Bank of America ERICA program. They did it for retail banking by themselves. Now, when they're doing it for wholesale banking, they're partnering with them in that space. And chatbots sort of are maturing too. I mean, they've gone from a point where they were just FAQ bots. In some sense, you were doing a lot of document ingestion and really creating a tree to address simple questions. To now, we work with one of the large telecom players here in New Jersey. We've developed their chatbot infrastructure, and you could go and you could run diagnostics on your router at home from the chatbot, and literally solve for internet speed issues using that chatbot. You don't need to get onto any service engineer call in any which way, right? So clearly seeing chatbots evolving into action-driven chatbots, and everybody wants to experiment in that space. And I'm not entirely convinced about chatbots play in the experience dimension, very frankly, because we did this survey last year with a lot of our clients on the topic of hyper-personalization, and there was a lot of good interest in, for example, next best action and using AI to drive that. But chatbots as an experience dimension wasn't really scoring really great with a lot of our customers. I mean, they sort of have to do it for checkbox purposes, just to have an alternate channel. But I'm not entirely convinced on the experience dimension of chatbots just yet.
I'm curious, I've left banking years ago, but what do the banks get out of this? Are they feeling that they're able to not pay as much people to do what chatbots can do automatically? Are the chatbots creating better recommendations?
It does. You see, at some level, it does create an alternate channel for particularly the newer customers, the younger customers, in some sense. But through chatbots, they're also creating a lot of unstructured data, something that Greg spoke about earlier, and we're starting to see a lot of interest in driving analysis of that unstructured data from both call center as well as chat transcripts to evolve, concepts around sentiment analysis and other kind of data and unstructured data analysis to profile a customer. Lastly, in some cases, chatbots are